What's going on, traders? This is Adam at Swiss Made Trades. Just going to go over the chart for ES over the past week. I already made a video for Monday's price actions, so just check the videos if you want to look at that. I think I saw something interesting, so just went ahead and made a video for Monday. So we'll go ahead and start off on Tuesday, and this is the 2500 tick chart, my go-to chart for day trading. Futures. So going into Tuesday, we had this big run up into the close. The overnight session we saw a big spike down and then just massive buying up into the open. And if we look at some longer term charts, we see that we're a red cloud underneath the cloud. I go to the 4-hour, super underneath the cloud, the daily underneath the cloud, and the only cloud that we're actually above is the weekly and the monthly. But the short and intermediate term, and even starting to be longer term on the daily chart, all those charts are telling us that you're going to want to be shorters into strength. So if you go back to Tuesday, so any big spike up like this, underneath all of those clouds, are expecting it to meet resistance at some point. And the resistance we would look for first would come on the 1-hour chart, which actually we saw that after hours Tuesday, that it came up into this cloud and failed 1, 2, 3 times. So 3 shots here, nice little triple top. You could have gotten short. Could have gotten short into the open actually. So if you play options or stocks or however you play the S&P, you could have, or even if you don't like trading in the overnight session, you could have gotten in a pretty nice short into Wednesday. But for Tuesday, we had this big sell-off off of the morning strength. We were kind of anticipating a little bit of a bounce. For the past 3 weeks now, we've had a turnaround Tuesday that starts with the Monday low. And this week was options expiration also, which is usually bullish generally for the entire week. And usually what we're looking for on options expiration is a Monday low, and then Tuesday is statistically the most bullish day. And those actually were kind of starting to play out. But as you can see, Monday definitely wasn't the low for the week. And while it's nice to play, statistical, it's nice to have this, like, the background of the statistics of options expiration or the Santa rally, stuff like that. You still have to be cognizant of the fact that this isn't a normal. We're not in a normal market. We're not back here just bouncing around. We're in extremely volatile times. I mean, look at this. This sell-off is actually happening slower than the one in August, but I mean, look, it's like the straight line down. That's not that's not normal. So while it's nice to have statistics, you just have to keep in mind that right now isn't the time to just not everything isn't status quo. So take everything, even statistics, with a grain of salt, especially right now. So Tuesday, we expected it to be green, and I think we did have a slightly green day, which the past few weeks, the turnaround Tuesdays have been green, but disappointingly so. And even then, Wednesday just sold off each of the past 3 weeks. So just in regards to the cloud, we had a nice bounce off support here. I got long here with my target here, but once I saw here, I think I got out somewhere around here. And once you bounce off the cloud, and then if you fail at the Kijun-sen, the red line, that's not a good sign of the cloud holding. So regardless of what side the cloud is on, so if it's a bullish cloud and you find support, and then you either get rejected by the Kijun-sen or you don't even reach the Kijun-sen and you come straight back down, then you know that you may be in for a cloud twist or a trend, change in trend. So that's what we had here. Nothing out of the ordinary about that. I was kind of, getting long here. You you would hope that you break through the Kijunsen and just go soaring, but you have to stay. You have to stay. You can't be completely bullish or bearish. You don't. It's not about being right. It's about making money. So once you see this rejection after the cloud test, you know to get out. And could it bounce off here and then you find support here again? Sure. And I actually got in right here to see if it would find support again, and then got out for like half a point loss, which is nothing. So came beneath the cloud. What you're looking for when you come underneath the cloud is a retest of the cloud. I wouldn't recommend shorting right here because you have all this space up here with the cloud. A better opportunity would be probably at the Kijunsen because it's towards the top of the cloud. That's two things telling you like, hey, this would be a good area to get short. Could have shorted here on sort of a double top thing, and kind of the Kijunsen, but to me that's finicky. We still have all this cloud up here, so not my ideal trade, so not going to make it. And actually, I think we kind of channeled here for a bit. Not really. Yeah, not really. So we have found a bottom a couple hours before close, and we just spiked up, and we broke out of the cloud. And what you're looking for when you break out of the cloud is a retest. So this was an awesome chance to get long, and if you're not trying to get long with all these red clouds, which makes sense. Sometimes when I'm being less disciplined, I will say, if my 1 hour, 4 hour, and daily charts are all either green or red, say they're all green, I'll be like, I only want to get long, so I'll only buy on weakness. Or right now, since they're all bearish or red, I would say I'm only going to sell on strength. So, but if you're day trading and you have something like this, this isn't, this is like, a couple points risk, which is totally reasonable for trading ES. So you could have got long here after the breakout and then retest of the cloud, and then all you have here overnight is just buyer failure, push up, buyers fail up here, and then they fail to even retest this level again. So 1, 2, 3, 4, 5 chances to get short. 5 things telling you like, hey, price is just getting rejected here over and over. Every time price comes up here, sellers step in. So I actually got short on this one. Usually I only need 3. A triple top is enough for me to be like, hey, short this weakness, especially with the clouds telling you to do so. So going into Wednesday, we had all this buyer failure up here, and the longer term trends are still bearish. So while the ideal trade is to play off the cloud, what I'll also do is, I'll play like triple tops or like quadruple tops, especially if they happen in the morning. One thing I've noticed a lot that happens recently is, even like the past like couple months, is if you have this enormous strength in the overnight session, and then you see this sort of just like buyer failure over and over, it's a higher probability trade to get short and then put your stop loss a point above, or like half a point above the high that was made, because it's not going to be a ridiculous amount of risk, and while you're not playing off the cloud, it's just playing off of price action itself. And just something I've noticed that works. If you're playing strictly off the cloud, you're going to take less trades, but they'll be more defined risk, because you can just say, okay, a point off the cloud and is my risk, and my first target is going to be the Kijunsen or something. So once I saw this, I didn't want to get long at all on Wednesday. At least not until we tested the cloud, which we did bounce off of a little bit, and we actually got to retest the Kijunsen here to the tick. It looks like just about. Why does that? There we go. Before we just got crushed, and well, I didn't get crushed, but the market got crushed in a straight down fashion. Now, once we broke out of the cloud, we didn't retest even the Kijun-sen until we started kind of forming a quote unquote bottom for the day. Um, so this sort of like straight price movement, whether it's up or down, you know, the market is a living, breathing thing. Like the S&P especially, stocks, they'll sometimes adhere to chart rules such as retests, gap fills, stuff like that. Most of them do all the time, but the S&P especially, it's usually better about correcting stuff like that more efficiently and faster than a random stock would. And that's a reason why I think the S&P is just so great to trade. It doesn't move ridiculously fast, and the only sort of like surprise news that would affect it is something like North Korea or some huge macro event that no one was expecting. But other than that, the news that affects it is going to be scheduled stuff that's on an economic calendar on whatever website you use, like the interest rate decision from the ECB that's coming out this Thursday, or the GDP numbers that are coming out tomorrow in China are probably going to have a bigger influence than the European Central Bank's decision. But like stuff like that, that maybe you shouldn't be holding a position into the news. Personally, you should not hold. I don't hold any positions through either earnings for a stock or through, say, I trade crude oil. I won't hold a crude oil position through either the API. I won't trade until after the numbers come out, or if I do, I won't hold a position through the numbers, if that makes sense, because you don't know, right? You might have an idea. You might read all these articles that say, oh, they're going to slash production, and it just makes sense for OPEC to slash production. But then, the next 5 weeks, they just increase production by like 5 million barrels. So you just don't know, right? It's the gamble. And in trading, you try to minimize the randomness, your exposure to randomness, because this isn't supposed to be a casino. It's supposed to be informed trades, high probability trades, well managed risk trades. Because when the crude numbers come out, crude can just jump a dollar in a matter of in a matter of like 10 minutes, and that's $1,000 a contract. So definitely have to have risk management and just be smart when it comes to news events and stuff like that. Earnings, you might have an idea, but you don't know, right? So that's kind of my rant about that. So the S&P, right? It's a living, breathing creature. It had straight move down, right? Didn't test the cloud, didn't even test the Kijun-sen. So what this needs to be fixed, right? Because this is an efficiently moving market, right? So what needs to happen for this straight line down with no retest that occurred, right? What do we need to do to fix this? Kind of had this spike down, downwards consolidation, making new lows. Buyers failed in this area 3 times. But we need to fix this straight line down. So on Wednesday, we saw this monster spike up. And then at the high, we brought us to, change this, let's call it 1927, right where we fell off on Tuesday. Now you can say it's a coincidence, but I don't think so whatsoever. You have to do a proper retest of a straight up or straight down move, and this confirmation of the weakness of this area allowed us to then seek new lows, as you can see in the overnight session and the rest of the week, really. So that actually, it made perfect sense to me. That had to happen. Would it happen? Will that always happen in a day? No, but with the expectation that will happen soon, and the idea that the market is wanting to go find support lower, it makes sense for it to happen sooner than later, so that the selling can just continue as we've seen the past few weeks. So nothing out of the ordinary for me. Had a spike up. You could say this is sort of a spike in channel. You have the spike up. It should be pretty obvious. and then I guess you can call this a channel. So you would expect it to retest over here. Change this. So pretty much you would expect it to test the cloud, which you would expect anyway. So that's, if you were in chat, I was actually awake during this overnight session, and I was like, okay, for me, bulls are in control. 18. I think I was looking at this number. It was like 1890. I think it was like 1892 to 1894, or like 1890 to 1894, something like that. And that was based on both this sort of spiking channel found support here, so I'd expect that to retest, and also the cloud. So that's two things telling me that this is a big area for bulls to maintain maintain the bullish bias. And once that fell, I just got short here because I had a feeling that we did the retest and we didn't even test it more than once. We just got smacked straight down, and I had a feeling we were either going to test this low or completely just try to find new lows. And I was done trading coming into Friday before the market even opened. So that's nice. Usually Fridays are good to me during the market hours, but I saw that we were coming into the cloud, and I thought, this thing has done its retest already. So this beast wants to seek lower support, which it did. It actually hit our price target of 1850 from a week or so ago, just based on prior support. So honestly, I was only glancing at my chart on Friday. I try to just stop trading completely, but it's never that easy. I think most people understand that. We had a nice double top here, then saw it lower. Actually, kind of found support. I think in the morning I was like, in the chat, I was like, wow, it's choppy. We had, double top here and then sort of a double bottom sort of trying to form here. But we failed at the Kijun-sen, and then went straight down to 1850, found a midday bottom before running up into the close. And also, if you were in chat, I said that the MOC order was 1.8 billion to buy. And you see the cloud is nailing resistance here, Kijun-sen nailing support, kind of. So once this happens, remember, once we go into the cloud and they get rejected at the Kijun-sen, we would not be surprised to see a change in trend, which we saw here. I think we saw that on Tuesday. I think earlier in the video I mentioned that. So it happened twice this week. It happens all the time. I mean, once it gets rejected here, that for me, that's a big sign that, hey, we could be, we could have a change in trend here, which we did. And so the MOC order comes out at 345. We had sort of a little sell-off here, but then what we'd expect with over $1 billion to buy, we would expect a run up into the end of the day, which we had a nice little 10 point run up, which isn't terrible. What's interesting is that in the past 2 weeks, the massive MOC buy orders came on Monday. For the past 2 weeks, we've had over $1 billion. I think 2 weeks ago it was, or 3 weeks ago it was $3 billion to buy, I believe. And then the next week it was another, over $1 billion to buy. But whether it's the holiday or whether it's just because they decided to slap the big MOC to buy order on Friday, we'll see if that means anything. Might have to do with China numbers coming out, so they're just kind of closing out some shorts. I don't know, but maybe that's a sign of things to come. Things are changing. We'll just have to wait and see. But see, you had a nice little gap down. Tonight's Sunday, by the way, and the markets are closed tomorrow, but futures are open. I'm not sure what the hours are. But a nice little gap down. The cloud, if you look at this candle, it's ridiculous. We just nailed this as support. And we bounced really hard off of that. So we're bouncing now. Short term is bullish. I shouldn't have to tell you guys that the intermediate to longer term charts are bearish. All day, all week, whenever we came into the 1 hour cloud, we tried here. We didn't even get a shot at the top of the cloud. So I was actually looking for 1953, 1954 for a nice juicy short, which would have obviously been a very nice short, but we didn't get there. And that was just based on the 1 hour cloud, which we haven't even we flirted with it a couple times, but we haven't come close to breaking out. So definitely bearish. The 4 hour cloud is even farther away. We haven't. I mean, the Kijun-sen is at 1933, and we haven't even come close to the testing the 4 hour Kijun-sen. So first thing we're looking for the intermediate term trend is a 1 hour cloud break, and then retest, and then shoot up. And then we would be looking at the 4 hour both Kijun-sen and the cloud for the next resistance, and then obviously the daily cloud, which we haven't really retested. I'd like to see that. I believe in the last video, or in the chat actually, I think I pointed this out. We're actually in sort of a spike and channel on the 4 hour. So what I mean by that, 2 touches, what's 3 touches? And they're never going to come out perfectly, but we have 1 touch, 2 touch, or multiple touches, and then not more touches, 1 touch, kind of poke through, 2 touch, and then 3 touch. So that's channel enough for me. And on a 4 hour chart, kind of carries some weight. So here's a spike down. So what we'd expect, if this breaks, is a retest of up here. Let's call it 2016, 2012, around there. But in a perfect world, that would look like, something like this. And then you retest the channel, and then you kind of go up here, test support, something like that. But key area is probably, the key thing probably would be this, if we get a break of this, and that would be bullish. I don't have high hopes for that, but you have to be prepared for a potential change in trend, which the Ichimoku cloud is a trend-based system. It's meant to, you just glance at it and you're like, okay, we're in a bearish trend right now based on this chart, or okay, we're in a bullish trend. Long term, this is the monthly chart. Long term, obviously, there's support's really far away, and probably the most interesting thing is that we're coming into this weekly cloud, which we haven't done since August. And like I said before, if we break this, then in my opinion, that's a sign of a bear market, because we would have broken the October 2014 low, and we would just be seeking further support down. And from a cloud perspective, once the weekly goes, you're looking at the monthly, and the Kijun-sen is at 1600, so that would be sort of a long-term target if we do go into bear market mode. But not to sound too bearish, we're still in a range, but it makes a lot of sense for us to sell off, just fundamentally, with interest rates and everything else going on around the world, crude oil, etc. I think historically, I saw a chart, and if you're in chat, I think I posted it. The S&P 500 earnings, the correlation to the price of oil, like there's a direct correlation to the price of oil and the earnings, overall earnings for the S&P 500. So when oil is down, earnings trend down also. So we'll see if that's the case. It's earnings season. I know retail is getting crushed. So we'll see how that goes. That'll probably affect the markets. If China has a 1929 like crash, then you better believe that it's going to take the rest of the world with it for the ride. So moving forward for the week, we do have China's GDP tomorrow. We'll see how that affects us. What they say. Whether it's the truth or not, we don't know, but um, what can you do? Overhead resistance, you can see buyers have failed here and here and here and here, so 1880 looks like the closest area. And then if you look at the 1 hour, the Kijun-sen at 1888. So 1880, 1888. And then if we bust through those, then the top of this cloud would be the next target, 1915 to 1920 area. Anything's possible, guys. Volatility is real, and you just have to stay vigilant. Don't get married to either side. Something interesting I also wanted to point out, and this is my modified RSI settings. We're actually coming into oversold, which we haven't even. The only 2 times that we've flirted with oversold on the weekly on this RSI is the August correction and then October 2014. So interesting level, just technically speaking, technical analysis. So if we continue lower, maybe we have a nice bounce, maybe not. The bounce would be technical, unless China's numbers give us a boost, which would be very convenient considering looking at the chart, we're kind of expecting a bounce. So we'll see if that plays out. If not, then we have the weekly cloud to look for support, which has about 100 points left. Otherwise, we have these previous lows, 1830 and 1811. You should all be familiar with those. So I'll leave you guys with that. I actually found some support at 1852. 1850 was a price level I mentioned is important in my last video. So I'll leave you guys with that. I hope this wasn't too long. Hopefully, if you are watching this, you're getting more familiar with the cloud yourself. If not, then I don't know what's wrong with you, because it's awesome. I know some people in chat, they use it for different time frames than I use it, and they're loving it, and that's awesome. With stuff like this, finding support just on a dime here, and then you can use it to sort of spot changes in trend. Like if you failed the cloud and then you failed the Kijun-sen, it's like, oh well, maybe we're changing trend here. So stuff like that to me is really interesting, and I just feel it's really useful every single day, and it's definitely changed my trading and changed my life. So I'll leave you guys with that. Try not to ramble too much, but good luck trading this week, guys and gals. I'll catch you in the next video if something interesting pops up. Otherwise, it will be a recap video for the short week. I hate short weeks, but what can you do? All right, guys.